Hey everyone, welcome back to Corporate Decoder, the place where we unpack those dense corporate filings and somehow make them interesting. I'm talking about Brinker International's latest 10K, and let me tell you, it's a wild ride through Chili's and Maggiano's finances. For the year ending June 25th, 2025, get ready because we're about to see if this company is cooking with gas or just burning cash. And hey, before we dive in, if you appreciate getting straight insights from these reports, make sure you're subscribed. We also have a growing Discord community linked in the description below. So Brinker International, the parent company for Chili's and Maggiano's, released its annual report. It's essentially a yearly checkup for shareholders, telling them exactly how the company did. Think of it as the company's personal diary, but with a lot more numbers and significantly less drama usually. First off, the market seems to like what they see. The value of the company held by people who don't work there, meaning non-affiliates, was over $6 billion as of the end of their second fiscal quarter. Imagine having that much money. That's a pretty hefty valuation, suggesting investors are confident in Brinker's future. Now let's talk about the real moneymaker, or perhaps money loser, the revenue. For the fiscal year ending June 25th, 2025, Brinker raked in a total of $5.4 billion in revenue. That's a significant jump from the previous year's $4.4 billion, which is a nearly 22% increase. This means they're selling a lot more food and drinks. And where is all this money coming from? The vast majority, 99.1% of it actually, comes from their own company-owned restaurants. This means the places they directly manage are doing the heavy lifting for the whole operation. But running all those restaurants isn't cheap. They spent $1.35 billion on food and drinks alone. Now, as a percentage of their sales, that's about 25.3%. What's really interesting is that this percentage stayed the same as the previous year. This means even though they sold a lot more, their cost for ingredients didn't go up proportionally. That's usually a good sign, suggesting they either got better deals on supplies or were able to pass some costs on to customers through slightly higher prices without a major hit to sales. Then there's the cost of their people. Labor costs were $1.7 billion, making up 32.2% of their sales. This is actually a decrease from the previous year when labor was 33.6% of sales. So while wages might be going up, they are doing a better job of managing their workforce, making more sales for every dollar spent on labor. This could be due to better scheduling, more efficient operations, or maybe just more people eating there, spreading those labor costs over more transactions. All this talk of sales and costs brings us to the bottom line, operating income. Brinker pulled in $512 million in operating income. That's more than double the previous year's $233 million. And as a percentage of total revenue, it jumped from a modest 5.2% to a healthy 9.5%. This improvement is a really positive signal, showing they are not just selling more, but are also more profitable on each sale. Let's dig a bit deeper into what's driving these numbers. Take Chili's, for instance. Their comparable restaurant sales, which means sales at restaurants open for more than 18 months, shot up by 25.3%. That's a huge leap. This increase was fueled by higher customer traffic, a better mix of more expensive items being ordered, and price hikes on some menu items. Imagine 1 out of every 4 customers at Chili's spending more than last year, and you get the picture. Maggiano's, however, paints a different picture. Their comparable sales only went up by 1.5%. While it's still positive, it's a stark contrast to Chili's performance. It seems like Maggiano's is facing tougher competition, or maybe hasn't adapted as well to current customer tastes. Their sales increase was mainly due to menu pricing, not a significant boost in customer visits. Now let's look at how much actual cash the company is generating from its day-to-day business operations. In fiscal 2025, they generated $679 million in operating cash flow. This is a massive increase from the $421 million in the prior year. More cash from operations means the company is healthier and has more money to reinvest, pay off debt, or return to shareholders. On the financing side, things look a bit different. They used $461 million in financing activities. A big chunk of that was paying off 3.500% notes. Gone, plus they also bought back more of their own stock this year. Speaking of stock buybacks, Brinker bought back 1 million shares for $76 million in fiscal 2025. This signals that management believes their stock is a good investment, and buying it back can increase the value for remaining shareholders. They also have a lot more authorized for buybacks, which means they might continue this trend. But it's not all sunshine and rainbows. Like any company, Brinker faces risks. One major one is changing consumer preferences. If people start avoiding their foods for health or dietary reasons, their sales could take a hit. Think about it, if more people decide they want less casual dining or more plant-based options, Brinker might struggle to keep up. Another big concern for restaurant companies is food safety. Even one bad incident at a restaurant, or even a scandal affecting the industry as a whole, could really damage their reputation and drive customers away. With social media, news of any issue spreads like wildfire, and a quick, effective response is crucial. And in today's world, cybersecurity is a massive headache for businesses. Brinker handles a lot of customer data, especially credit card information. A breach could be disastrous, leading to lawsuits, fines, and a major loss of trust from their customers. It's like leaving your digital door unlocked in a busy city. They mention a specific cybersecurity incident, but it seems to have been resolved and didn't materially affect them. That's good, but it's a constant battle for them and all companies. Now, one of the really important parts of these reports is management's assessment of their internal controls. This is basically saying how well they trust their own financial reporting. Brinker's management and their auditors, KPMG, both concluded that their internal controls over financial reporting were effective as of June 25th, 2025. That's a solid sign that they have a good handle on their financials and are transparent with investors. Looking at how they manage their people, it's clear Brinker sees its employees, their Brinker heads, as crucial. They invest in training with about 87% of new general managers promoted from within. They also have a program called Best You EDU, which offers free GED and associate degrees. This focus on employee development and happiness ties directly into their business strategy of providing a great guest experience. And how have they done compared to the market over the last 5 years? Well, their stock performance has been outstanding. If you'd invested $100 back in June 2020, it would be worth $750 by June 2025. That's way better than the S&P 500 and definitely beats the S&P Restaurants Index. This indicates strong execution and investor confidence. So what's the big picture here? Brinker International is showing impressive growth, especially with Chili's leading the charge. They're improving their operating income, generating more cash, and returning value to shareholders through stock buybacks. Their focus on employee well-being seems to be paying off in the restaurants too. However, they're not without risks. Changing consumer tastes, the ever-present threat of food, and eye on potential pitfalls. Hier mun men eye on potential pitfalls, heavier stroy, owls, edfi, and Chili's, suggesting a need for a focused strategy to boost that brand's appeal. Alright, that's our breakdown of Brinker's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.